Hey everybody, welcome to the February edition of the Austin Hot or Not Market Update.
Hot or not.
I'm John.
And I'm Alyse. And we got some numbers to look at. And a baby right there. So we're talking about February. The reason that we talk about comparing January to January then is that we have a complete month's worth of numbers for January.
Right.
So in February you compare January to January, if that makes sense.
Yeah, so this is not the whole year compared to the last whole year. It's just the month to month, or January compared to January versus January compared to December.
Yeah, totally.
Okay, so we focus mostly on South Austin. So South Austin is everything south of 71, west of 35.
Gosh, I feel like we do tons of North Austin too.
We do, but we can only do numbers for so much. So we want to be a little more specific, so
good
that
point,
we
good
know
point.
what we're looking at, right?
Good point.
And so we have
So
to look
this
at
is-
one section versus another.
All of Austin,
Yep.
and this is South Austin.
Right, so not, 04, but south of 71.
South of 71 to 9071.
Okay, so like
Better
the
words.
numbers continue to be like crazy.
Crazy.
And it's also reflected in what we're seeing with our clients out there too.
Yeah.
Okay, so
heck
let's get to it. Okay.
Let's do it.
So in all of Austin, first let's look at that number. 1,107. There are roughly
are only 1,107 homes available to be purchased
That's
in
right.
all of Austin.
And I've been watching over the month and it has dipped below that number for a little bit. It was in the
Well, if you remember
around
last time
thousands,
we did this, last month, like these two numbers, the number of ones that had gone under contract and the number of ones that were active were almost the same number.
Yeah.
So that was crazy.
Okay, so month over month. Now, before I do that, 1,000 homes. There's almost 1 million people in Austin. So that's 1 in 1,000 people have a home to sell.
Wow.
So month over month, down 11%, which is
Yeah.
not right because I want to say it was at like 1,800 last month.
Hold on, you should know statistically, a person sells their home about every 7 years.
Yep.
Right? So theoretically, a seventh of the homes should come up for sale over the course of the year.
So 7 times 12, 1 over 7 times 12, whatever that is. Do your math out there.
Somebody got a calculator?
84. 1 over 84. 1/84th of the population should have a home to sell.
Exactly.
Of the homeowning population.
At least 1 in 100.
Yeah.
So 1 in 100 and
Yeah.
So anyway.
So down 11%. No. So year over year, here it comes. 36%.
Okay, so that means
Down.
January of 2020 compared to January of 2019, there are 36% less homes available this January. So we thought last January was busy.
Yeah.
And then there was this January.
Yep.
So crazy. And then if you're looking at number of homes that actually sold.
Okay, so we're gonna go down.
Yeah.
Columns and rows.
We
Let's
always
switch it
debate
up.
this like
All
every
right.
time. So note that this is
We're
roughly
consistent.
about half. So remember that in the United States, anything under 3 months of inventory is considered a lightning fast market. And the
we're
way
two.
you calculate, inventory, number of months of inventory, is you take all the houses that are available to be sold right now and you divide it by how fast things are selling per month. And so in this case, we're at about 2 months of inventory.
Ooh, down 45%.
Yeah.
Month
Okay,
over month.
so if you remember,
Well, that makes sense.
December was screamingly high. These
Yeah.
two numbers were almost equal.
Yeah.
Right? And so December was particularly high on solds. And now there's just not stuff for
Yeah.
people to buy.
Yeah.
And so the number has to shoot
does, it
down.
does.
They just- what are they going to buy?
Yep.
So it's a little something out there. It's great to be a seller right now.
It is, but then you got the other problem. If you got to go buy something afterwards,
Totally.
Unless you're going to move out of the city, then
Exactly.
you're going to be on the buy side. Okay, month over or year over year down 10%.
Yeah, exactly. So this is a more realistic thing, but it makes some sense that if we have a lot less homes less available to be sold, that
Well,
some people are just gonna not get houses under contract.
Yeah, it just still just shows like less inventory, right?
There just aren't enough sellers selling right
So
now.
it means it's a good time to build.
Yeah.
But building also takes time, and there's not a lot of places to build.
If you were
unless you're
thinking,
way out of town, right? Like outside of Austin, which is where a lot of the building is happening.
if you were thinking about building homes to
Yeah.
spec to supply the mass quantity of people moving into Austin, you should talk to John. He's
Well,
really,
it makes me feel real good about the spec builds we're doing because I know we're gonna have buyers. Because there's just no inventory.
yeah.
And
it's
all of
true.
our transactions now, we've got like a line of people trying to buy stuff,
Yep.
and they're just not. They're having to do
And it's
multiples.
one of those things people will see these numbers and they'll, especially when we get to medium
Yeah.
price, and they'll think, oh, the market can't keep that up. And we go, well, here's the thing. There are not enough permits
Yeah.
coming out through the city of Austin of new homes being built to keep up with the fact that they expect the population of Austin to double in the next 20 years.
Yeah.
And we have Apple opening an office and Facebook opening another office. and
Amazon.
Oh my gosh, all the things.
Yeah.
And so.
And then all the support staff is going to come to service those companies.
In other words, if you own a house now, you should see some great appreciation.
Yep.
If you don't own a house now, it's worth it to get in to see that appreciation. If you want to upgrade, now is a good time before all that appreciation happens, all that jazz.
Yeah.
So, medium price.
California, here we come.
Oh yeah.
Okay, median price up 2% month over month. So if you annualize that, that'd be 24%.
That would be lovely. Actually, once you compound it.
Yeah.
Yeah.
And then year over year, 18. So that's really hot for the real estate market. I mean, that's like bubble territory.
Yeah, exactly. But the problem is that we have the population coming in to keep it from being a bubble. Obviously, it can't keep this up.
Yeah, at some point, people just won't be able to afford and it will stop. But there's no excess inventory. So I'd be more worried if you're like building all these subdivisions out in the middle of the desert, like you saw in Nevada and stuff. But right now, at some point, like the numbers will go so high that the inventory will start to go up because people will be going like, dang, I can get how much for my house?
Well, and here would be my argument to that is that
market.
Can we keep up 18% growth per year? Oh, hell no.
Yeah.
However, I don't see prices dropping anytime soon with the huge amount of population influx that is coming into Austin. We went down in our number of people moving here per day, and now it's come back up.
Yeah.
So Austin is still growing. This might not be able to keep up at 18%,
well,
but it's not like we're gonna.
I mean, it'll do this. It might bounce off of what people are willing to do and drop some, but the inventory is going to be our signal for lower prices.
Yeah, exactly.
Which is not there yet. Okay, South Austin.
Nor does it look like it could be
116, which is roughly like a tenth of the rest of the city, right? And so month over month, 20% fewer.
Wow.
Right.
20% less homes available to be purchased in the month of January versus the month of December.
Right, which is weird because like your inventory is continuing to shrink past December into January. Right?
Yep.
Year over year down 54%, right? 54.
So we're out there fighting the battle. We are winning battles for our buyers. It does exist, and those buyers are going to see a lot of appreciation in the short term.
You got to come with some chutzpah for those offers.
You got to really work up your
gusto. Be ready. Yeah.
Exactly. And I'm like, look, we will find you a house. We will get you into a house. We just might take an offer or two.
Put your fighting gloves on.
I know we win more than average number of offers, but we got to write a couple sometimes to get you in. So
okay, so solds. 122 down 38%.
Oh my gosh.
Same problem.
Look at that.
Oh yeah, it's more. The sold is above
there
actives.
Are more
less
homes
than a month.
sold in South Austin than were available to be sold in January.
Yeah.
So that means we have less than 1 month of inventory.
Less than a month.
Oh my god.
Okay.
Up.
But that's up.
Just slightly. Just slightly. Basically, people are willing,
Well, you had more inventory last year.
Yeah.
So maybe that's why you got a little bit more sales.
Yeah.
Right.
Well,
but that's getting eaten up.
It's getting eaten up, but people are just saying, no, it's still worth it to buy.
Yep.
Even though
because look at the median price is still 50K less.
Relative to Austin, South Austin is still a bit of a deal.
So median price?
And if you look at the median price in Austin versus other metropolitan areas with the same level of industry and the same level of educational institutions, Austin is still a deal relative to the rest of the major, cool metropolitan areas in the United States.
Yeah, if you're coming from Seattle or San Francisco, it's you'll still get more
exactly. Tons of tech, tons of culture, but less house price. So
up 4% median price.
Okay, that is month over month from December to January.
Double Austin.
And remember, what's the definition of median? If you line them all up in a row and you pick the one in the middle. That would be what it is.
Not the average.
Not the average. Because what we find is that the average skews it drastically, based off of $1 million homes and things like that. They pull the average way, way off. So this ends up being like over 500 when you look at average.
Yeah.
And so it doesn't present an accurate picture of what your average person is paying for a house.
Yeah.
So, and then what about year over year?
Last sticker, up 17%.
South Austin. Woo. Nope, though, it's not as bad as the rest of Austin.
It isn't, right? So it's good like the rest of the neighborhoods in Austin. Right?
But 17%. They say 3 to 5 is like a maintainable level of growth.
Oh, which actually, I said you could throw a dart and you'd be fine, but that's not true. There are certain zip codes, especially closer to downtown, where the appreciation probably is much lower because it's topped out, right? It's much more luxury.
Exactly.
Terrytown, things like that. I mean, I haven't run the numbers.
It's still growing, don't get me wrong.
If I were to run them, I would expect their appreciation to be less because they're already at the top of the market.
But neighborhoods that were considered like less nice, but still relatively close to downtown, they're going up fast.
Yeah.
If you want a report of the appreciation over time, over the last 15 years of, you know, any zip codes that you're thinking about selling, buying, investing, all that jazz in all of Austin. Happy to get it to you. That's something we get to people on a regular basis so they can see the trend of where that's going in zip codes that they're
I love numbers.
interested in. I got a math minor.
I didn't say you didn't love numbers.
I love numbers, but you love numbers more.
Maybe.
That's a thing that exists. Anyway, you guys are amazing. If you know anybody who wants to buy, sell, invest, we would absolutely love to help them. And I'm Alyse.
And I'm John, and we'll see you next time for the March edition of Hot or Not.
Heck yeah.
Bye, guys.
Bye.